Today we'll be asking why Europe is leading global equities. Donald Trump's election was widely thought to herald a period of outperformance of the US stock market, spurred by corporate tax cuts in America and with the rest of the world hindered by tariffs imposed by the US. However, since the election, the European equities have outperformed US equities by over 10%. Year to date, European equities are up about 12%, while the US market is up about 4%. Perhaps one of the main drivers for European stock market outperformance is that expectations were so low. A stagnant economy, a cumbersome bureaucracy, and a hostile US administration had led analysts to downgrade their expectations for European company earnings. However, a weak economy was never a good reason to be negative on European equities, given that so many revenues for European companies are determined overseas. And the weak economy would mean that the European Central Bank was likely to cut interest rates aggressively. Likewise, American aggression may have been the catalyst that Europe needed to reform its unwieldy institutions, for Germany to reconsider its masochistic fiscal rules, and for the continent to take responsibility for defence. For America's part, perhaps investors are starting to realise that a wholesale attack on US and international institutions requires a higher risk premium for investing in US assets. A few years ago, investors were concerned about return of their capital from investing in China. Now investors are starting to question the institutional framework that underlies American capitalism. Moreover, the emergence of Chinese cheap AI alternatives has raised questions about lofty valuation on US tech stocks that dominate the US indices. The US market is still performing well, underpinned by strong earnings growth across a widening range of companies. But the experience of the last few months highlights the importance of maintaining exposure across a diversified range of assets, whatever the prevailing narrative. Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.